So Skillz yesterday, the stock absolutely skyrocketed through the roof. It was up over 30% during the day. And right now, I think there's still a lot more upside, and a little bit what we're seeing could even be like a short squeeze like we saw with GameStop. Over the last couple of weeks, the last 2 months actually, Skillz has received a couple different short sellers reports. It's received 3 in total. So the first one was a couple weeks back, and the first short seller report was from Wolfpack Research. They criticized Skillz. They said basically that the company had too high of a valuation. They said the revenue projections were ridiculous. There was no way that they were going to be able to hit these numbers. And they said that the demand for esports was actually appeared to be declining already. So they did not like Skillz at all. Since then, Skillz has just tanked. It was at over $40 a share, went all the way down to like $12 a share right before we saw this little bit of a run. But now I think, there's a lot of upside, and we're seeing even a short squeeze like with GameStop. The second short seller report was from an account on Twitter. Just a week later, after that Wolfpack Research report, an account on Twitter named Restraint published a short report highlighting risks Skillz faces as from the Google Play Store, other risks of relying on other platforms and being a mobile company. And then the third short seller report just came out this week. Just the last couple of days was another Twitter account called Eagle Eye Research. It was just a brand new report, a brand new account that posted this report. And essentially, they said that Skillz was misrepresenting revenues as well as its overall financial condition. They were basically lying to investors, and all of this has continued to drive the stock price down. But this has presented great buying opportunities all the way down to $12 a share. Now it's gone up pretty significantly, but I still think there is massive upside. I think it could easily reach where it was before we've seen this massive drop off towards that $40 per share range. So right now, 4 things I like about Skillz, a couple different things. First of all, the potential for a new hit game. A lot of people who are bearish on the stock don't like how with Skillz, it relies on a couple of different games to generate most of its revenue. So right now, approximately 80% of its revenue comes from its top 3 games, which are Blackout Bingo, Solitaire Cube, and 21 Blitz. A lot of people are like, well, if you're only relying on a couple of games, then what happens if those games aren't popular anymore? That's going to be a big struggle. However, that's just the nature of the platform. They've been this way for years. And if you could see from 2016 to 2020, the top 3 games have always been switching. They're never the same exact 3 games that are in the top. What happens is when they see a game does well, they start investing in that, advertising that, and, investing in sales and marketing to get that game out to more people. So that's just the nature of the platform. People are continually to develop new games, and that's the one thing I like about Skillz. There's always more games being developed for the platform, and if they're spending a lot of money to develop them, then when one hits, one does well, they spend money on sales and marketing to drive that up to the top of the rankings. Obviously, a couple of them seem to stay at the top for years and years, but they always seem to fade away, and Skillz has always consistently been able to develop new games and scale them successfully over time. So I'm not worried about that, but some people, that they could see that as a downside. I just see that as, they're consistently developing more and more games. They're going to always spend the money on the games that are doing well for sales and marketing. Next up is with geographic upside. Some people who are bearish on the company also talk about how most of the revenue comes from the US, and that's a smaller market. But this is actually an upside, in my opinion, because the international mobile gaming market is 4 times larger than North America, but it currently only represents 10% of Skillz' revenue. So right now, they're able to do about $300 million in revenue just from the US market, which is 4 times smaller than the global market. So I think as they continue to expand into India, expand overseas, that's going to mean more and more revenue for the company. And, if they just keep the same ratio that they have in the US, they could potentially 4x the revenue from where it is right now. They said they expect that India will increase their addressable market by 65% and projected to grow 4x faster than the United States. So they're saying that while the US is a much smaller market. They are expanding overseas, and overseas, this digital gaming market and mobile gaming market is growing even faster than in the US. And the last thing is with their numbers. A lot of people are saying their numbers right now don't justify the valuation. Their valuation is too high. But in reality, in 2020, they did much better than expected in terms of revenue. Their numbers were at $230 million for 2020 in revenue, which was $5 million above guidance. 2021, they reiterated a $366 million revenue guidance, but it wouldn't be surprising if they raised that even more, because in the first quarter, they had about $80 million in revenue already. So looks like they're on a very good track. My opinion, the company's continuing to grow very, very quickly. They went from $230 million in revenue 2020, projecting about a 50% increase to 2021. On top of this, they're starting to enter the international markets, which is much bigger than the US. And with the short sellers, once people start to see that there are a lot of short sellers attacking this stock, getting behind it, that could drive a similar frenzy that we saw with like GameStop, AMC, and like that.